All right. Emergency podcast. I have John and Kyle here with me from Zeroed In Consulting, and we're going to talk about audit today. I've been having too many conversations with accounting firms and with businesses who are getting bullied by auditors. And it's an epidemic, and we have to stop letting people get bullied by auditors. And we're going to talk to you about what audits even are and how to stop getting bullied and stand up for yourself. And the reason I have John and Kyle with me, not just because they're cool and smart guys and run a cool firm, but they run Zeroed In, which is a consulting firm. They're both former auditors from big eight accounting firms, and now they run a firm and help clients get through audits. And before I just became someone who shit posts on LinkedIn, I was an auditor. So we've all done our fair share of being annoying and also stopping people from being annoying. So we're going to help you get through the same thing. John, Kyle, what's up?
What's going on, Tom?
Thanks for having us.
Nailed the intro, right? All right, cool.
Yeah.
So what are we going to cover? What's an audit? When do they happen? What are the different types of audits? What do they do in an audit? The big one, what can auditors actually make you do? And then finally, how to stand your ground. So we're going to get to the good stuff, but let's like set the floor of like what's an audit, right? Like what is the point of an audit? Kyle, like what's an audit?
Yeah. I think all of us probably have heard about the IRS coming in and taxing audits. I don't think that's what we're talking about here today, right? What
Yeah.
we're talking about is when it comes to when you got your own financial statements and when people come in and are checking those numbers. So, what I will say with that is if you're a smaller business, right, if you're family owned, you could care less about an audit. You probably never had to face it. You've had the privilege to not have to face it. It's just not something that's on your radar. Now, when you start to get into larger and more complex areas, and I'll give you a great example of like when you're starting to go out and raise some pretty major funding, let's say like eight-figure checks, things like that. All of a sudden you're talking to more sophisticated investors, and all of a sudden those more sophisticated investors or lenders, they want to make sure that the numbers are right, right? And not just that you're accounting for them right, but that it's meeting the needs of, more and more complex accounting requirements. So between that and, I know we were talking about Q of E a little bit too, Tom, but especially between that and if you're looking to go sell your business, these are the two times when, you're really starting to see and understand what an audit is all about.
Yeah, I mean, to say it in a really dumb way, I think it's just do the numbers that you're saying your business is doing, do those numbers actually make sense or are you lying? Right? Like that
Hmm.
at the end of the day is like, is this right? They're not necessarily trying to catch you or like get you in trouble for anything, but they just want to like sanity check it. Now, some people can go a little too far, and we'll definitely cover that. But I think, you started touching on it. I think it would be helpful to kind of give people a sense. And John, maybe you could take this one. Like, when do people start to get audited? Like, let's say my business is like under $1 million and then maybe like under $10 million and then like under 30, like at different stages of sophistication, you're more or less likely to go through different types of audits. John, what have you like seen just for people listening to be like, oh shit, am I about to get audited? Maybe, maybe
Yeah.
not.
Yeah, so I think most of the triggers actually happen externally. So most people like don't willingly say like, "Oh, I want to go get like a financial statement audit," right? I think it's kind of like I'll do it to like the analogy of like most people like don't want to stick an ice pick in their eye, right? So because it's a painful process, it's a costly process. Most of the time it's driven from like external parties. So like Kyle was saying, like investors, if they're going to go for like a series B, series C round, they're gonna be like, that's great. I want to make sure that what you say is correct. And you're gonna have to get an audit as part of this like funding round, right? And so that's typically the trigger point that we see. And so yeah, I would say it's almost never driven internally and it's almost always driven externally.
For sure. And we're going to cover like financial statement audits for the most part. I think it makes sense to really quickly just like give an overview and I'll run through them, like the different types of audits, because I think a lot of times it's just like this umbrella word that gets thrown around. And there are actually different types of audits. So, like, a financial statement audit is what we've kind of been alluding to so far, where you're like confirming the accuracy of the financial reports. Like, let's look back at what you said happened last month, last quarter, last year, over the last period of time. can you actually prove that the numbers you're saying your business did happen, right? That's a financial statement audit. A financial statement review is kind of just audit light, right? It's just a watered down audit. It's the same concept, but a little less stringent. You have a Q of E, or a quality of earnings audit, which is, hey, like I'm about to go raise more money or like potentially get acquired. And while they're still going to focus on the historical, they want to be like, is this business going to continue in the same way? It's a little bit more forward looking. Are we going to talk about the nuances there? And then, of course, you have tax audits. Like maybe you followed TikTok tax advice and try to deduct stuff that you shouldn't. And now the government's coming for you. You have internal control audits, which are probably the most boring audits of all time. They probably have as much aura as like the wafers they give you at church. They're literally so painful and boring. And it's just like, are you following the rules? Like, are you doing things in the right order? We're not going to talk about that beyond that. And then compliance audits, which we're definitely going to skip, is like, hey, are you adhering to specific laws or regulations? Right. The purpose of this podcast, I think most people here are going to be businesses that would go through a financial statement audit. We're going to talk on that. But guys, I do have a lot of people ask us about Q of E. So, Kyle, can you just like really quickly give a little overview of like what the nuance there is between a Q of E and a financial statement audit?
Yeah, for sure. So a lot of the times when you're talking about a Q of E, like you said, Tom, you're either, looking for funding to do some fundraising, but most especially is when you're going out to try to sell your business. So it's, companies coming in, a buyer that will say, "Hey, I really like your business. I want to buy your business, but, I want to make sure that those numbers are correct." So, and the interesting thing is it focuses less on what we would think about from a financial statement audit, right? Like where, everything has to be reviewed perfectly and needs to follow all the rules of this, complex research. No, they're more focusing on, okay, does this drive, cash or value, right? EBITDA is one of the biggest things that they focus on there. They're looking at working capital. These are things that don't really get looked at in a financial statement audit. So it's really kind of focusing on more of the, what an investment banker, what a, finance person would really want to understand for a business. And, similar concept, are those numbers correct? Are they being presented the right way, but for different purposes, right?
100%. And John, you and I were talking a little bit before the show. Maybe you can tease it now. I do want to get to independence a little bit later on. Before we get like fully into that, let's just talk about audit procedures. But maybe you can give a little bit of a teaser or like allude to kind of the rules of a Q of E versus a financial statement audit and where they're allowed to push. Because pretty much after this, I want to focus on financial statement audit. But let's get that out of the way in case anyone listening to this is like, wait, I'm going through a Q of E audit. Do all of the things you're about to tell me apply to me also?
Yeah, no, and that's a good question and like a good call out. But like there is like one distinction that I do want to make. So there's the buy side Q of E, and then there's the sell side Q of E. So the buy side is the acquirer is going to come in and say like, I want to take a look at your books and make sure that like we see the value that Kyle was just talking about. But there's also the sell side where you're actually performing that quality of earnings. And that's almost to like defend yourself against the buyer's Q of E to say, hey, like you did your Q of E, I get it, but we also did our independent Q of E, and this is where we match up. It's almost like a negotiating tactic. So if we're talking about like how we could potentially like, push back against the buy side, that's how you would do it. You would actually get a sell side Q of E and say like, hey, we got it independently reviewed. This is where we're at, and then it's a negotiating tactic, right? Then you start to go, okay, you said this, but we said this. We'll maybe meet in the middle here. Maybe we'll pass this along. So that's kind of like how I would structure pushing back against buy side Q of E's is to actually perform your own sell side.
And John, when you're saying perform your own sell side, you're talking about going out and finding your own independent firm to
That's correct.
perform
Yeah.
that audit, right? It's not
Yep.
something that you can just ask your own team to do on your behalf. Still somebody independent, but you're
Correct.
basically hiring like your own lawyer to negotiate against their lawyer, right?
That's pretty, I mean, yeah, that's a really good analogy. And there's firms and like Zeroed In is one of them that performs sell side Q of E's for that purpose, right? It's like a defensible, like, hey, this is what we're valued at to basically go up against the buy side. So
Yeah, and
Awesome.
and there's different motivations, right, between those two. Yeah, like if you are on the buy side team, you are trying to get that price down as much as you can,
Yeah.
right? You do not want to pay, too much for a company. So that's really what you're focusing on. Guess what? You're not trying to find things that raise the price. So, when you come in and you're bringing on a sell side, QV provider, it's a very different motivation. It's like, okay, you're bringing me on, so I can not just make sure that we're ready for when they come with all these, haircuts. We're going to find the things that really kind of push us up and, raise that value, right? So, really good distinction between those two because there's different motivations with each side.
Yeah.
Awesome. Let's talk about like what actually happens in an audit. And I'm going to give a quick rundown of different types of audit procedures. And I think this is a good thing if you're about to be audited to ask them like, hey, like what kinds of audit procedures are they going to be performing? All audits don't come in the same shape and size, and different audit procedures will give you a different sense of reassurance. So, a walkthrough, we could debate whether or not it's an audit procedure. That's kind of like, hey, just like show me what you're doing, walk me through at a high level, explain your process to me, and I'll probably ask you to show me some things along the way. Very popular in internal audits, but still popular in other kinds of audits as well. But when you actually get into testing, you've got inquiry, inspection, observation, confirmation, reperformance, and analytical procedures. And let's give an example, right? So inquiry is like, hey, like, do you do this? Right? Or why did this happen? Literally, I ask you a question and you give me an answer, and that's an actual audit procedure, right? Inspection is show me what you did. So, like, I say that I reconcile something every month. Okay, just show me the file where you did it. Okay. Observation would be show me you doing the file. Like, show me it actually happening in real time. Reperformance is you take the file and say, I'm going to redo what you did and see if I come to the same answer. Right. And those are four very common audit procedures that you'll see. The others that I didn't touch on off of that list, confirmation, like, hey, let me actually check with the bank that they have the same numbers that you do. And analytical procedures, like I'm going to do some data analysis, some trend analysis, look at your data in a different way and see if anything's going on. Guys, when you're dealing with clients, and let's kind of focus on maybe some of your private companies, maybe even the ones that are on QuickBooks. I know you guys work with all different GLs, but what kinds of audit procedures are you typically seeing your clients deal with as part of the audit? And do you see any difference? Like, hey, these firms of these sizes see different things. What have you experienced with your work at Zeroed in consulting? Because I'm sure in your previous life you've done all of those different kinds of procedures, but now on the good guy side, helping your clients pass audit side, what are you dealing with?
Yeah, I think one of the biggest ones that is going to hit everybody is, everybody wants to test revenue. I mean, it's just the biggest item on there. People want to make sure that it's right. And a lot of that comes with coming in and basically saying, hey, show me what your revenue is made up of, right? Give me this list. Let make sure that it agrees to the number that you got. And then I want to come in and I want to test a number of these things. And that's called sampling, right? So I'm going to take a sample of your transactions and I'm going to tell you, hey, give me the information that shows that this actually happened. That is pretty common, I would say, for just about any revenue generating entity. The interesting difference that we see is how many, of those samples come around depending on if you're working with a larger firm, smaller firm, if there's more risk, if it's a messier, client or something like that. I mean, we could talk about going in and testing like a few, like three or four, if it's all sitting in, three or four different like customers. Or you could have hundreds, literally hundreds of these samples coming in and like they're like, hey, give me the contract, give me the payment, give me like, show me that you did this. You can imagine how much time goes into some of this stuff when you're trying to figure out the right way to do it.
When you started talking about sampling, I felt like I was like a war veteran and there was like a sound going off. And I was like, should we just like have a 4 hour podcast where we debate sampling methodology? Like what we
Yeah.
Yeah.
that is like the auditors love to just debate haphazard versus random. How random actually is it? Like so Yeah, I just had a really bad flashback there. I got a
I
little
mean,
disoriented for a second.
I don't
that's
miss
a
sampling calculators, man.
yeah, no, sampling calculators are truly the worst. But I feel like, okay, so if you're talking about like where could you potentially push back, like that's actually a really good like first one to kind of maybe talk about is their sampling methodology sound? Because like we're just talking about, there are so many different sampling methodologies that you can use. And it really just depends on like what your source data is. If you have 4 customers, it's probably a lot easier to sample than like 100 or 1,000 customers, right? And so like how you do it, that should be a conversation that you have with your auditors, because sometimes they're just going to default to what they know or to what was done last year. And, Sally's a big thing. But like sometimes there's a more efficient way. Maybe your business changed and you need to like change the way that the sampling methodology works. And so like pro tip number one is like that's a really good place to start is like look at their sampling methodology and see like, dude, this is going to take me 10 minutes per transaction. You want me to do 100 of these? That's 1,000 minutes. Like that's unreasonable. How can we maybe restructure this to get what you need and to not kill me because I also have a day job, right?
Right. And especially in a financial statement audit, right? You're going for, is it materially accurate? It's not like an internal audit where there's like we need to get coverage over a certain number of instances of this thing happening, regardless of size necessarily, right? An internal audit, you're like, is the process firing on all cylinders the way that it's supposed to? But for a financial statement audit, like how do I get comfort if you're telling me that it's $50 million of revenue? Like what percentage of that do I actually need to verify before I'm like, yeah, I believe the rest of it? That's really what sampling is picking enough that you feel good. But I do think that everyone who's ever done audit realizes how much bullshit there is in audit, because if you fail enough samples, they'll just keep picking until the coverage is good, right? So like you basically could just keep, as long as you're not totally lying, you just keep paying higher audit fees, and then eventually there's enough and you're good, right? Like I'm not going to
Yeah.
say where I might have worked previously. I'm not going to say anything about those kinds of audits and probably how much those audit fees were and how many additional samples they had to pick, but there's you can pretty much get away with anything as long as you're willing to pay enough money for them to just test forever.
Yeah, and I think it really just comes down to like level of comfort, right? That's
Sure.
a word thrown around audits all the time. And so I think that like if you were to make one mistake during the sampling process, well, now our comfort level went down. So we have to somehow mitigate that. And that comes through more sampling takes more time, and more time equals more fees. And yeah, that's unfortunately the formula.
What do
Yeah,
you
I've
guys
all,
see as like the more popular, like are your clients like when they're being audited, do you see people actually reperforming stuff? Is it mostly inspection? Like when you're talking about Kyle, yeah, my clients, revenue is what they're going to shoot for first. How do you typically see firms kind of attacking that?
when we're talking about more private company
Yes.
audits, right? I would say, like you said, Tom, like they're doing a walkthrough to kind of understand, what's going on and how it works. That helps them get a sense of like, okay, this is where I need to dig into or look at. But a lot of it is really a lot of those going out and validating. So less of the, they ask inquiries, but it's less of the like observation or reperformance. It's like, hey, here's this item, show me the support for it, right? And I think that follows a little bit more under the confirmation. Confirmation is one of those. Maybe it's like, I need to go out and talk to your bank to make sure that that balance is right. You can't show me something yourself that, looks correct. But a lot of it is, hey, I selected this, show me the support for it, right? And maybe that's more on the inspection side, but I would say that's the bulk of what I see when it comes to testing for a financial statement audit for private companies.
Right. And sticking on the revenue vein, like John, if someone was being audited for, and they, obviously they're going to focus on revenue. I'm a B2B SaaS company. They're coming in and auditing us. They want to look at revenue, right? Like, what are the kinds of things that you're typically, expected to show? Like, if I'm a controller or if I'm working in a B2B SaaS company, I'm like, I'm about to get audited. What documents do I need to like care about and make sure they look good? What is an auditor going to likely ask them for?
Yeah, so there's obviously a revenue schedule. There'll likely be a deferred revenue schedule. And along with that, there'll be like contracts, invoices, POs, stuff like that, that basically validates what you're providing to the client. Because it's not only a question of like, hey, did you sell this product or this service? but it's also like over what time period? Like, are you recognizing the revenue correctly over the period of time? So it's like, are you just giving somebody a widget and it's just like a point in time sale? Or is it something that's like over time? And like sometimes I mean, you can't really tell that from looking at like GL data. So typically they'll have inquiries about like, tell me about your revenue streams. They'll walk through the different revenue streams. Then they'll tend to bucket those revenue streams into, like categories. So then say, okay, give me a sample of 5 contracts in revenue stream one, 5 contracts in revenue stream two, see if it aligns with the way that you're recording revenue. And that's kind of how they start to like do their like audit procedures is they'll look at the actual contract because that tells you, is it a point in time? Is it overtime? Are there, and then I'm not going to go through the whole ASC 606 analysis, but there's like a whole methodology around this. And Kyle's probably like cringing, like, oh my God, there's so much more to this. And there is, but I'm not going to talk about it.
And you guys talk about ASC 606 with your clients because they're a little bit more mature. Meanwhile, I have people come to me and they go, well, you need to be 606 compliant. And I'm like, how much revenue are you doing? Like $5 million. Just use accruer and straight line it. Just write for the period. You don't need to care that much. It's not that big of a deal. No one's going to ask. It's close enough. So I'm
Yeah.
constantly steering people away from doing like full on performance obligation things. Obviously, when they need to, I'm not going to tell them not to. But I do think that sometimes people can over prepare a little bit too early, right? Again, like if your revenue is materially accurate, if it's straight line versus if you do like a true 606 analysis and allocate all of those things. I'm what are the standalone selling prices and all this shit that I hate so much, right? If it's almost the same and it's taking you a ton more time to do it one way versus the other, and you're not that big of a company yet, sometimes I think it's okay to like say, hey, this is how we do it. And we've already checked that if I did it the other way, it wouldn't be that much different. So we're just going to keep doing it this way because it's actually more cost efficient for us to do it that way. And I think that's like a good transition into the next conversation and really what we want to talk about, which is like the setting boundaries and standing your ground, right? Like at the end of the day, what is the purpose of the audit? Are my books materially accurate, right? And the auditor's job is to verify that they are materially accurate. But like auditors can't come in and dictate what you do, right? They can only test and try to verify that what you're doing is right. I think there's a fine line there because if somebody comes in and you're selling annual contracts and you're treating them all on a cash basis, the auditor can tell you like, yo, that is like that is wrong. That is wrong. That is the accounting itself is wrong, right? But the process of how you do accounting can't really be dictated. So, John, maybe you could talk a little bit about the concept of like independence, right? Like what rules are in place to stop an auditor from bullying you? Because the rules say they can't bully you, but they still do it anyway.
Yeah, so independence, just to kind of maybe clarify what exactly that means. So if I go in there and I audit something, I have to be independent of the work being performed, right? And so if you're going in there and dictating how the work is being performed, there is I'll call it a gray area of independence where you might be showing them the right way. So like for example, like when we were former auditors and we were going through, let's say like a 606 analysis, we couldn't tell them, hey, this is how you account for revenue under 606. You could go in there and be like, hey, here's the guidance. You should go and interpret it and kind of figure out, kind of give it to them, but like not be like, oh, no, no, let us perform it for you. And then we're going to go and audit it. And then you'll be good. Because obviously, I'm going to agree with the answer that I gave you because I gave it to you. So that's like the whole concept of independence, right? Is like you have to go and independently perform something. I'm going to go in behind you and basically say that, yes, this is correct and I agree with it. And if that's basically like the line. And like it obviously gets blurred a little bit in some situations, but I would say that like in its truest form is like independence.
Kyle, what would you say like is a clear example of overstepping if you've encountered it? Because I agree with John there, right? There are gray areas where you can like lead the horse to water, kind of. It's like, oops, I accidentally left these breadcrumbs and you just so happened to follow me and now you're doing it the right way. That always happens, right? There's a difference between explicitly telling somebody what to do and dropping a lot of hints and doing webinars that tell them exactly how to do it, but they just have to listen to the webinar on the side. But like, what are clear oversteps in your mind?
Yeah, so I would say one clear overstep, and I'm going to stay on the topic of revenue, right? I think we've
Yeah.
been talking about it long enough, but I mean, it's when you're coming in and basically you're telling them like you're almost writing that memo for them, right? It's like, hey, and people might enjoy that, being able to do that on the audit side, but that's a clear, breach, right? And they're saying, hey, if I'm dictating the terms, like you need to be doing it this way, right? Like you have not made a decision at this point. You have to be going out and, finding this huge bulky process to, recognize it down to the cent, right, of
Yep.
what that can be. And that violates a lot of different things. One, it's like nobody's going to be testing down to the specific cent when it comes to these financial statement audits. That's just the amount of time that it takes to pull that together is just so unreal. But then also, again, it's what we're talking about of you are now crossing the line where like you're not telling them, okay, I'm going to work with you. I'm going to be reasonable, right? We're going to find that like you tell us what you think is right and we'll tell you whether it's okay. It's like, no, you need to be doing it this way, and that's in my mind when we're talking about revenue is a big one, is that's problematic for me.
And Kyle, I think what you're kind of describing is like there's a difference between like a recommendation and a kind of like a hey, like no, you're doing this going forward. And Tom, I think that's kind of what sparked this entire conversation and us wanting to have a chat here was like auditors kind of overstepping the recommendation mark
Yeah,
and basically saying, no, no, you have to do it this way. And like quite frankly, I don't think a company doesn't really have to do anything. An auditor
exactly.
says, but it's do they want to pass the audit or not might be a different story. And
Right.
yeah, I mean, obviously that's contentious.
100%. And that is where this came from, right? I had a conversation, had a few conversations. People were like, the auditors are making me attach support to every single journal entry. And I was like, they can't make you do that. That is
It's
that
good
it
practice,
it's a
but
good
they can't make you
practice.
do that.
Right. And let's talk about that, right? It is a good practice, right? And it may make their audit procedures easier and they may go faster, right? And depending on how you're contracting with the auditor, right, in theory, you might almost be overpaying for the audit because now they're doing more work that you didn't want to do. But you do have to balance that with, well, how much time is it going to take my team to follow that process, right? And the question of why do I need to attach the support? Right? Like this is how you start to have that conversation. Why do I need to attach the support to every single journal entry? Well, you need to show why the journal entry exists. Why am I posting it? Okay, I can actually explain that in a different way. Right. And I think the importance of any conversation with an auditor is what are you trying to accomplish as the auditor? What questions do you need help answering? Or what do you need me to prove to you? Because just you want me to prove it to you your way, but if I can prove it to you another way, that also counts and it's just as good. And I
Yeah.
think that's something that I learned where I had to start saying to auditors why. And then I became like a petulant child and I would just keep saying why. No, why? Explain to me the requirement. Explain to me the guidance. Explain okay, fine. How is this not satisfying that? Right?
Yeah.
This is why I'm comfortable. And have that conversation and like really just like get your mind out of the audit and bring it to like a common sense process and accounting conversation. And I think a lot of times auditors come from this background of like, I just regurgitate what my manager said. And now I just keep saying that my entire career. And I never stop to think, why am I even asking for this? Right.
Yeah.
So that conversation is really important. And I think like Kyle, you were talking earlier about like pushing back, right? Like talk to me a little bit about like those kinds of contentious conversations that you might have had where, somebody is pushing on one thing and you're standing your ground saying, no, we don't have to do that and we're not going to do it. And here's why.
Yeah, I mean the perfect situation actually happened for us this week, right? And so this one it's for a public company, but I think it can apply to everyone. The idea is that, there's a lot when you start doing these financial statement audits, there's these really complex transactions. You got to go through and you got to make sure you account it for it right, right? That means, doing a full write up, checking the rules, writing up and saying, "Hey, here's my position. I think it's correct because it's grounded in, all the rules that I looked through." Now, auditors can come in there and say, okay, but did you think about this? Actually, the accounting's wrong because you missed this point. That's perfectly fine. I mean, and that should be done, honestly. We had this situation this week where we put together our position, we buttoned it all up. And the auditor came back and said, well, we don't disagree with you. And this is crazy. Like, we don't agree with you, but we don't disagree with you. Okay, what does that mean? Second off, they said in order for us to kind of issue the audit, we want you to go to the SEC and get this pre-cleared before you can go and issue the audit. Now, let me put that to an analogy of that's basically going to the IRS and saying, "Hey, can you audit me before I file my taxes?" Who's going to do that, especially like thinking of the
That's
time that
insane.
it takes to like go and
That seems
get this
reasonable,
figured
Kyle.
out. You have
Yeah.
immediately like put yourself up as like a red flag with
That's a
the
new level
SEC.
of crazy. I've seen crazy audit stuff. Go
I
talk to the SEC and then we'll be okay with it is the craziest thing I've ever heard.
Yeah.
Yeah.
Yeah, it's outrageous. I mean, I like it just blew my mind when I heard it today or this week, and we were having these conversations with the auditors, and we'd be like, okay, so you're telling me that it's wrong and that we need to change it, and that's why you want us to go to the SEC. And they're like, well, we didn't say that, but we're in full CYA mode. That's what it is. There's a lot of
Yeah.
these audit firms that are in full CYA mode, and like, you know, and they don't want to take the risk. But you need to be able to be a collaborator to, your company and the auditor, like, okay, let's talk about the options here, not just straight to SEC, get pre-cleared. You're probably going to miss your 10K filing date, by the way, but you got to go do this.
It's an interesting point about the that audit firm being risk adverse, right? And we didn't touch on this, but I do think that not every audit firm is created equally, right? And there are definitely, for anyone that's like seen The Big Short, like there are people that are like the rating agencies that will just give you the rating that you want for a certain amount of money, right? It's like the doctors who would just prescribe kids Adderall that didn't need Adderall just because they were in college and wanted it, and they would go and be like, I'm tired sometimes, and doctor's like, here you go, my
Yeah.
no copay, $250, go ahead, right? Like there are audit firms out there that will do. You don't want to use them, they do exist. Um, and John, maybe you could talk a little bit about this, like when you disagree with an auditor, like, hey, I think this, and they tell me no, it should be that way, right? Like one thing that I've like done in the past is you obviously want to be respectful of them, right? Like we are talking about don't let them bully you. I am disparagingly talking about myself in a past life, which is fine because I can do that. I've earned it. But like sometimes it's like, okay, fine, you're saying this, I'm saying that. Let me compare the difference if I did it your way versus my way. The difference isn't big, right? And like we have this concept in audit of materiality, like does it matter? And we've talked about materiality on past episodes of our podcast, or you do it in a quantitative way. Maybe you look at how much revenue you have, maybe you look at your total asset value, a lot of different approaches. But I think the common sense approach is like if I went to my CEO and I explained the difference, would they go, "Oh, okay, thank you for telling me," or would they slam the door and say, "Stop wasting my time"? Right? Like a common sense approach to materiality. So talk a little bit at that, John. Like, how can you kind of bridge that gap when you disagree, but you can prove that the disagreement actually doesn't matter?
Yeah, I think it goes back to like the whole collaboration. So like the best audits that I've been on or been a part of have been ones where like, yes, we are going in there and like trying to find if there's anything wrong, but it's where like it's a very open approach, it's a transparent conversation. And those are the ones that like tend to go very well because if something is wrong, you don't go, oh, fraud, fraud, fraud. It's like, no, like let's go figure out like why this might be wrong, right? And be like, oh, our bad, it was a mistake, let's go test more, or actually no, it's because of this and this is why. And that's like having those kinds of conversations with clients is just so much easier because then you guys are both charging towards like the same goal as opposed to like, and believe me, this happened more times than I'd like to admit. Like I come in there and everyone like looks at me and is like, oh, the auditors are here, go sit in that room with no windows in the basement and like, I'll see you in 2 weeks. And I'm like, oh my God, like I
Yeah.
hated that. Right. And so I think having a collaborative approach with your clients or with your auditors is like 100% the only way to get there, kind of at the same, like side by side. And so to bring kind of materiality into this entire, segue of a point that I'm trying to make here is that materiality is really when like, would the investor care if this was different, right? And so you should 100% always have your, professional skeptical hat on as auditors, as former auditors, as just accountants. And so if you can prove to them that, yeah, this doesn't really matter in like the grand scheme of things, a true collaborator in the auditor would be like, I agree. All right, cool. Let's just like document it that we went through and we thought about these different approaches and that we are okay taking this one here.
I feel like the collaboration is a great point, and I do feel like in public audits, the collaboration always seems to happen at a particular time when the filing date is coming up, and we're like, all right, there's 2 more weeks. Let's sit in a room and figure out why this doesn't matter anymore. And you're like, wait, we just spent 2 months obsessing over every little detail and arguing about it. And now there's something that actually might be a problem, and we're going to flip the script and instead be like, all right, how can we string together a reason why we don't need to do any more work? We're all
Yeah.
tired. Let's just lay our guns down. The war's over. We got to end this thing. Doesn't always
Yeah.
happen with private, but that is it's a good point. I think also like if you are an auditor, like coming in and humanizing yourself is really important. And I used to do that all the time. Like people would be like, "Why do I need what?" Like, oh, like you could just tell they were like disgusted by me showing up. That's honestly why I started joking around at work because I would just like try to lighten the mood and be
Oh
like,
yeah.
yeah, like every boy's dream growing up to observe payroll. And like I remember I was so scared. I had to go into the payroll room and these ladies were like so scary and mean. And I just went in there and just made fun of myself for 30 minutes. I got every piece of audit evidence that I needed. And they're like, "Wait, how did you do that in 30 minutes?" I was like, "Well, I just kind of made friends with them by making fun of myself." But it worked. Like I established a relationship and then I became the guy when you got to go ask that hard question, got to have that hard conversation. I'll go do it because they don't hate me, right?
Yeah.
I've made it clear that I'm just doing a job. I know this part seems dumb. That part is dumb. I disagree with it. This part seems dumb, but it isn't dumb. And here's why it's not dumb. And if you just do it this way, look, we'll be out of your hair. We don't want to be here either.
Yeah.
And I think that's an element of collaborating in and of itself.
Yeah.
Establishing rapport is key. So I want to wrap this up. Kyle, you're the audit master, I think. I mean, John, you might, I don't know. Last time we
You're right.
established who can win in a fight? I forgot. We established that last time, but I can't remember who would win in arm wrestling.
In arm wrestling,
John
there's
wins
a
in
lot,
arm wrestling.
there's a lot of power in John Ikos here
All
when
right,
it
John
comes.
I
wins
was
in
gonna
arm
say
wrestling, but
I don't want to
Kyle
throw
wins
it
in
out there,
audit.
but yeah,
Yeah, in audit, in audit. My
Kyle wins
audit
in audit.
arm is a lot stronger than
oh
John.
yeah, 100%. Kyle's like three additional years on me when it comes to audit. So
There you
like
go.
yeah, no, he's definitely got it.
Kyle, take us home. Tell the people one more time why they can't get bullied, and if they want help, where to find you guys if you want to help them.
Yeah. I mean, the best way I can put it is audits suck. That's just like the way it is. I say that as an auditor. I said it when I was an auditor, like it's just a brutal process for everyone involved. So I love Tom's note on like, being a human, building that rapport. But the biggest thing is really like, find the ways that you can be prepared for it too. So that, when those auditors come in, they're not just, shooting at the hip and figuring out what to do. You've actually got some stuff in place to say, hey, here's what we've done. We've thought through it. We think that this is a good approach. Let's have that conversation. That is something that we at Zeroed In Consulting try to do for every single one of our clients, right? We want to get them ready. We want to find the most efficient and effective way to do it. And we want to reduce the amount of headaches and back and forth. Like, who likes being on that 20-person call, that just debating about, this small paragraph that's in a memo. Nobody wants that. So what we do is try to get all of our clients in a good place, be a collaborator with the auditors, just make it an easier, smoother process. So that's what we do over at Zeroed In. And if that's helpful for anybody that you want to reduce those headaches, we'd love that. We'd love to chat with those folks.
I love it.
Yeah.
Good stuff.
There's such a difference, and real quick, I'll just end on there's such
Yeah.
a difference between being proactive and reactive that like the best audits are the ones where you come prepared into the audit, and the ones that end up being like dumpster fires are the ones where like you didn't even think about, all of these accounting standards until like 3 weeks after the audit started. And it happens, unfortunately. So yeah, don't be that person.
To bring it back to the bullying piece and close it out, right? Like if you're prepared, like you don't want to let the auditor bully you. And just like a real bully, if you have your comebacks prepared, once they start bullying you, you're good. So be prepared with your comebacks, which is having your documentation, having good processes, and knowing what they can and can't do to you, because then you'll be safe and you won't get bullied by the auditors.
Way to tie that together, man.
That's
Wow.
what I do, baby. That's what I do.
Goodbye.